is understanding what the sensors have actually delivered to us. Being able to eliminate noise, being able to bring up the relevant, do the whole analysis on what is it that the sensor is actually seeing. So we do then the fault like type, what type of a fault it is, and obviously then we do the location calculations.
Welcome to PEP, the Protect Europe podcast, where we interview founders and investors building the technology that protects Europe's values, way of life, and infrastructure. Hi, Paula. Thank you so much for coming on the podcast. I've been very excited to do this episode for quite some time, partly because, little known fact, my father actually worked in the electricity industry in the UK and actually spent quite a lot of his career looking at the problem space that you're solving. So I kind of grew up with this as a backstory in my kind of family background. So he's retired now, so I'm super interested to see where the sector has moved since then. So welcome. Great to have you here.
Thanks for having me.
Now, tell me about the problem. What is SafeGrid solving?
So basically what we are doing is helping our customers who are the electric grid operators to operate, maintain, and invest into their assets based on accurate real-time knowledge of the true condition of those assets. So maintain, operate, and invest into assets based on accurate info on how are those assets really doing. So that's kind of in the big picture what we are doing. But where the company has started, obviously, is fault locating and fault prediction. So basically what we do is that we put an X on a map whenever a fault occurs. It sounds very trivial. It's not.
It sounds like treasure to me. It's like X on a map. I'm going straight for where's the buried gold.
That's kind of exactly how their lives have been, more like treasure hunting. Okay. Going even patrolling along the lines, trying to find those faults actually. So you just kind of get outages. But when you need to actually find that what is causing the outage, it has been typically very manual, laborsome process. So basically what we do is to give them a real-time X on their topology map when the fault occurs, so they know immediately where to go. So that's kind of where the company started, fault locating. And what we have then evolved to is the fault prediction, which means that we are following those very subtle signals that can be seen in their assets much prior to when they are going to break up. So then we are actually showing, in addition to those X's on a map, we are showing hotspots on a map. So we start to collect the accumulation of those subtle signals that something might be going wrong in this and this locations. And then our customers are able to take preventive actions and move their whole operating model and maintenance model much more towards this preventive maintenance.
This sounds fantastic because obviously, most people's lives involve flicking switches, the lights come on, the computer comes on, the phone charges. And we don't predominantly in the developed world think too much about where that electricity comes to. We certainly know when it's not there.
Oh, yeah. Exactly.
We certainly know that. But we don't think too much about the journey of it getting to us from the power station, via the substation, however it comes, etc., etc. And obviously, if we're not involved in the industry, we definitely don't think about effectively that. What's the process for preventative? What's the process for kind of managing those kind of assets, as you say? Okay, so that's given us a good understanding of the kind of problem space. And then, so where do you think the company will be? Where will SafeGrid be in this 10-year timeline? So if it was 2035, up and to the right, every founder's story, where's the company in 10 years?
Yeah, so I'm not going to say that it's your typical unicorn type of a company. So what is very typical in our industry with our kind of solutions is that you build them really slowly, which makes financing also them in the beginning part quite difficult sometimes. Yeah. But the whole core point is that those solutions that get established on the market, they can have a run of 15 to 20 years of 100% growth per year. So we are not your typical trying to get to 500% growth for a few years and so on and so forth, but it's more like a stable, steady 50 to 100% growth, but the success story looks like that you can maintain that for like 20 years in a row.
So I love kind of businesses with that growth platform. I you know, the classic, we've moved on, right? You know, we're not in the 2000s, 2010. This isn't an aggregator economy. This isn't like Uber, Airbnb bidding on the wave of cloud and mobile. Get a bunch of, you know, lean hard on one end of the marketplace. There's your business. You know, we're now in the days of SpaceX, you know, Anduril. These are hardware plus software, vertically integrated systems. The growth is exponential, or the margins are very strong, but the timeline's different. The caveat to that is obviously GPUs today basically last 5 minutes, right? So that's a business model where there's huge capital intensity in a very short timeline. I love the fact that you are much more longer. But where does this play out in terms of a market positioning for you guys? So in 10 years' time, are you managing Europe? Have you taken over the world? Or please tell me we're outside Finland, right?
Oh yes, for sure. So basically there is like 7,200 DSOs, so distribution service operators in the world. We are currently serving about 90 customers already at this point. So we think that we want to get to, let's say, hundreds of customers over the time of the coming years. So that's about where we want to be geographically.
And just to be clear, I presume that not all customers are equal. Like, so you onboard one customer and you've basically, that's a whole state, that's a whole country.
Well,
another customer is much smaller. So
basically we have like 3 categories of customers: large, medium, small. The large guys are having over 100,000 kilometers of grid. The medium guys have 10,000 to 100,000, and then small ones are less than 10,000 kilometers. Obviously, the longer term game, you need to have like a good mass of those large giants. We were at 5 tier 1 customers in the beginning of this year, and we are hitting 15 by end of this year of those guys. So we are like tripling our tier 1 customer base. But honestly, it just takes then years for that to show really in the top line, because you need to start so small pilots and they want to run them for a long time to become convinced of the technology. So, but it's a long play with those giants. But actually what we have done is that quite differently to many other startups, we are not only betting on those giants. So we've really built that base of over 80 small and medium-sized customers, especially the small guys. So they are much faster, they are much more agile. And if I'm looking at the revenue, not only this year, but also like especially next year, so our biggest deals are actually now coming from the small customers who started early, who are already done with their pilots, and now they are doing deployments to their whole network. Obviously, those networks are smaller than with the giants, but they are doing like full deployments with our solution. So in terms of like deal size, the biggest deals are actually coming from the small to medium customer base for us still next year, maybe even the year after. And only then it starts to become realistic for us to start to get to those really big deals with the giants. But you obviously need them for the longer play, because, you know, when they start eventually buying, then it can be like 2.5 million euros per year for 10 years. With one customer.
No, it makes perfect sense. And I think there's the challenge there of effectively not waiting for the very big players to move very, very slowly, but proving yourself on that smaller tier player. But also I think there's a huge advantage. People move jobs, right? And people talk in all sectors. So if you've just fully deployed SafeGrid across effectively your smaller tier, seen massive results, you then get moved into, you move job into, you know, you get headhunted into the big guy, and you're like, why am you using SafeGrid? You know, we saved this much, we did this much. I think over time, you know, like all companies, if you stay in the game and you become well respected, the market starts to push in your particular direction.
It's definitely a reference game, and it's kind of important in all the markets that we open to understand also that specific country dynamics on how the referencing works there. For example, in the US, which is now our biggest market and fastest growing market, so there's quite distinctively like 3 different markets within the US. So one is the large IOUs, investor-owned utilities. One is the co-ops, which is cooperatives, and then one is municipality-owned companies. And they kind of have like this very strong reference culture within that peer group. So you kind of need to break into each of these customer groups like separately and start building then the momentum, so then you kind of get going.
Oh, like whenever I was always talking to founders, I always talked about kind of that bowling kind of alley. Right, we've all been there. The bowling alley with lane 1, 2, 3, 4, 5, 6, 7, etc. And you've always had that situation that if you're bowling in lane 1, that's great if you get a strike, but it doesn't change your score in lane 7. Right, lane 7 might look at your strike, but they're not going to buy. Right, you really have to do a great job in lane 1, and then lane 2, start working on lane 2, and then lane 3. Lane 7 and lane 8 how well you do in lane 1 doesn't change anything. It's that kind of adjacent kind of customer.
Oh yeah.
And they don't see the deal that you did in lane 2 as related to their huge tier 1 business.
Yes.
It's great, but it doesn't mean anything. There's no signaling power in that. Okay. So that's the kind of market sizing. That was really useful. Now let's talk about the technology. Right? Okay. So how does I still got the treasure map in my head. How do you stop them kind of like with kind of going along with their shovels and their picks to basically find the X on the line? How do you stop that?
Well, so the solution consists of hardware sensors and a software SaaS platform. Basically, we have, I would estimate that our core innovation is pretty actually evenly split between the core innovations within the hardware and the core innovations within the algorithms and the analytics that we are doing on the software side. So if I start from the hardware, in our proprietary sensors, we utilize traveling wave and partial discharges technologies, which are both kind of quite well-known technologies as such. However, the recent years' advances in computing power and the cost of very sensitive equipment has made it much more lucrative and possible to build what we are building. Yeah. So as such, the electrical phenomena has always been there, and it's kind of nothing new. It's a question of being now able to utilize what has been there all along with our technology. So the sensors, core competence is collecting proprietary, very subtle data, real time from the grid along the either overhead lines or underground cables, and then realizing and understanding when the sensor has seen something that is relevant, and then very efficiently packing it, picking it, sampling it, and then sending over to the cloud over mobile connection, typically the relevant data package, which is then unlocked in the cloud, where then the other part of our innovation obviously is understanding what the sensors have actually delivered to us, being able to eliminate noise, being able to bring up the relevant, do the whole analysis on what is it that the sensor is actually seeing. So we do then the fault type, what type of a fault it is, and obviously then we do the location calculation. So the location calculation is a triangulation. There's always very accurate timestamp attached to the data package. So then we can, when several sensors see the same phenomena at the same time, so they send all their info up to the cloud, where then it's combined and we can triangulate from their timestamps the exact location of where it happened, what the sensors saw. So that's kind of the core idea of how the system works. And then obviously for the user, I mean, after all of these, a core part of the whole solution is to be able to package this into a user interface that is intuitive, where the grid operators can very fast on their familiar topology. They know their topology, they know their geography, but they can see their assets there visually, and they can very intuitively see, the critical alerts, the notifications, so that it kind of jumps to them and they can have a quick look at it and run into action if it's a fault. But then obviously if it's more like a precursor event on the predictive side, they can then start to dig deeper into what could this hotspot be about, what are the kinds of assets they maybe have in that hotspot. Maybe they have a history of certain types of assets breaking, maybe they have had problems in that area previously, and so on and so forth. And then they can start to make the decision on whether that's something that they want to act on. And actually that's the part that we are now focusing a lot on. We are just like in 2 weeks time actually launching our smart fault prediction 2.0, so a new generation on the predictive side. And the core element that we've been focusing on is giving actionable insights on the predictive side. So basically what we are seeing is that our customers are not lacking data currently. So they are getting like huge amounts of data from their legacy assets. The much bigger problem is lacking actionability. So they don't know what to do with that data. They have no way of, prioritizing of what piece of data or finding should they act on. So what we are doing is that we are bringing them a prioritized list of findings where we combine the strength of the phenomena that we are seeing, where we combine it to the adverse impacts that it would have if it breaks right there, and then we combine it with confidence level. So if it's like a very strong signal, we are very certain of our prediction, that adds up in the priority. And when combining those elements of the severity, so the level of energy, the impact, how severe it would be, to how confident we are that it's a real observation, we get the priority. So we are giving to the customers like, here's your top 10. If you don't have time for anything else, look at these.
That is amazing. There's so much I love in what you said. So I love the fact that you are mixing those atoms and bits, right? So this is not a B2B SaaS company. This is hardware and software and AI working in harmony. And really, you don't get that place at the table unless you deliver on the hardware equal innovation. I love the fact that, again, the cost curve has come down. So this is now possible because solar panels are not new technology, but they were a bit expensive in the 1960s if you wanted to put them on your spacecraft, right? But the cost curve has enabled that technology to come to the front. I love the fact that you've now evolved beyond what's happening, millions of notifications. Oh my God, you've just brought me more email. Thanks. So, millions of notifications issue. And now you're starting to get to that. Okay, this is the things that you need to do. This is where you're getting the best return on investment. This is where I'm triaging for you. So I'm giving you that intelligence layer on your legacy system data, and I'm enabling you to be proactive and preventative. Love that. The obvious question there is, how much have you had to integrate with their legacy systems? Or are you kind of almost an overlay, a kind of hand on top of their systems, providing the data? Or have you had to do any integration into their actual, because this has been run, this technology, these systems have been running since, my father was running them in, quite a few years ago. I won't name him.
Yeah. Well, basically on like OT IT division, we would be on the IT side because our system is not like actually, for example, switching a switch. So we are providing our customers information. So it's more like information steering and information guidance rather than actual operating their grid equipment or being responsible for the protection, for example, of the grid equipment. So that allows us to stay as such on the IT side of things. But then depending on our customer, so currently we have been managing just fine with like REST API, a type of integrations where if they want to, we can obviously integrate and, give their ADMS or DMS or OMS systems or even SCADA just the plain coordinates of, for example, the critical faults, if that's what they choose. However, what we are finding is that most of our customers choose to have it as a separate screen or separate system just because the whole user interface and the depth that you can get into is so much more rich when you use the native like safe grid system rather than just getting those coordinates into your SCADA or something like that. But obviously, when looking much further down the line, I would assume that we would be step by step going maybe to deeper integrations into their systems. But I think the key actually will be most likely more like maybe customer specific clouds or customer specific cloud implementations, because now we're just like a cloud, and obviously it's just Europe and US on like separate servers currently. But what I would see that might be happening is that we would go down into like area specific clouds by the request of our customers, and maybe even all the way down to a customer specific cloud.
Okay, and just out of interest with that thought process, so is the reason to do an area specific or a customer specific cloud because effectively you can speed up that feedback intelligence loop effectively, or is it kind of protecting their data, or is it improving their response time? Like that actually you would do something that is, I'm training my model, for want of a better word, on only your data in this geography to try and get a better result for you.
No, it's purely because of their requirements. So we would not actually do it. But what we are seeing is that our customers are still actually having somewhat doubts of anything cloud, like even just running anything on cloud. You have to remember that we get their topology.
Yeah.
So they are quite sensitive in terms of like if we would go like to full deployments. So basically it means we know all of their assets very accurately, like geospatial, like data level. So the whole drive towards more regional, local, and even customer specifically hosted clouds is because of our customers' preference being there.
Okay, so it's more about security and less about if we're going to, if we turn the conversation in that direction. Obviously this is critical infrastructure and this is a critical service that effectively that you are providing. So obviously they're worried about their data being leaked, but obviously if I was a bad person, then obviously would I try and hack the municipality, the energy provider, or would I try and hack SafeGrid, right? Because in terms of if I want access to all the topography data, well, actually, you've got more than the average aspect. So then it becomes a question of how safe can you maintain your systems, because you then become not necessarily a single point of failure because you're not integrated, but you certainly are potentially a data source for those ones. So how have you managed to then think about your own cybersecurity, cyber defense? Because you are inside this protection bubble.
Well, so far we truly do feel that we are on Azure kind of environment. So we do feel that those guys are kind of living out of the fact that they need to be able to secure their customers like data. And I think you need to be pretty darn good to say that you're better than Azure, for example, in doing that. So that's kind of what's the basic thinking there. And then on top of that, we did quite early on already the ISO 27001 certification, which we feel that gives a very good starting point for even like early stage companies. So I would actually really recommend any companies to take the bullet and kind of go through that kind of process. It's not only just to have the ISO 27000 like thing to show to the bigger customers especially, but it truly does give you like a process infrastructure as well. So kind of those are the key things. We are relying on Azure. We are not having thoughts that we could do a lot of things better than what they are already doing. We of course need to be aware and understand what that means, and then on top of that we are focusing on the things that we can have an impact, which are well covered with, for example, the ISO 27000 framework.
Okay, no, it's super interesting. And then in terms of just how long, and again, I appreciate every customer is different, but how long does it take to kind of, you said years, but how long does it take to roll out? And is that just slow and steady, small pilot stuff? Or is there actual some physical constraints in terms of sensors, availability, configuration? What's the kind of average rollout? What would be the best rollout? All right. So, electricity company of the Netherlands says, let's go. Safe Grid, we love you. What would be the best rollout that they could do? And then what's the kind of constraints at your end? Because obviously I appreciate you're at earlier stage. You can't do everything all at once. You need to prioritize as well.
It really, really depends on the customer. So, for example, we had one of our first customers in the US, which is a cooperative called Randolph. So we met them at an event. So events are very important in our industry, in kind of making the first contact. And I think they made an order. We got PO in for a pilot in 3 weeks after the event. So that's a kind of a record.
Okay, that's the benchmark, and all salespeople will be judged according to this new benchmark.
And then on the other extreme, we just got in a PO from which we really appreciate, of course, from Duke Energy, which is one of the the tier 1 customers in the US, and that has been in the making for almost 3 years. So that's kind of your extremes right there. And that's like then the pilots. And one of the things, obviously, that we have been working a lot has been on how to then increase the pilot size so that you don't kind of end up doing so small pilots that they become meaningless for the customer. So you need to get to a big enough pilot that in the context of that particular customer, it has at least some meaning in it, which then has been one of the things that we have been now succeeding to do, because first it was like we even had like these pilots of like, yes, we take like 3 sensors. We are like, it's like
it's fine. We've only got 100,000 kilometers.
So in a sense, so now we actually just got our biggest new customer acquisition deal from the US, from a new customer, where the first deal was about 250,000 euros, which is already then like a sizable, pilot for a new smallish customer. So that's kind of a thing that we've been like really working on, kind of how to ensure in the customer communications and in our like pilot selling process that they understand the relevance of, if they want to go in such a scale that then you actually can make some decision after the pilot.
Yeah, it definitely needs to be a 3. Oh my God. It needs to be like the percentage of their
something
system.
Like that, yeah.
Otherwise, a minimum threshold. I do remember talking to a company, I won't name them, but they sold a license to NYPD. They were in the security space. They were super excited. I'm like, how many licenses did you sell? And they were like, 2. And I'm like, okay, so that's 2 individual police officers are covered by your product. And last time I checked, quick ChatGPT Google search, NYPD had how many?
Yeah.
What kind of scale?
Yes.
It's going to take a while to start selling on that side. Yeah. Okay. But at the moment, are there any real hardware constraints? Because that's one of the other issues. You're not just doing B2B software, easy to... What are the hardware issues in terms of your supply chain, in terms of if Duke go, let's go.
Yeah.
Let's go. Yeah. Can you guys go? And how long does it take to go?
I think we are, that would be one of the strengths, I think, of our company and our teams. Many of us have a Nokia background, even in their volume products. So that was one of the first questions that I asked from founder Jussi Hakunti, who is currently the president of SafeGrid USA. That what if one of those guys actually orders big? He looked at me like this. Paula, I was the product manager of Nokia 2310 over there. We sold like 100 million a year. Believe me, if we get the order, we will deliver. So, in that sense, we are still like in very small volumes, but obviously, so we are working with electronic manufacturing service partner. So, and we've just like upgraded last year to a bigger partner, which has then the scale that is suitable for us now. And we have like the continuous process, obviously, then, if need be. So we would have the understanding and the skills to ensure that we get to the volumes. In terms of like the supply chains and the constraints there, so of course it's been quite volatile at the past years in many ways. Obviously, there's the whole issue of the geopolitics and the tariffs that are impacting a lot of the component planning and the supply chain planning. Currently, also a question of the US customers, for example, for obvious reasons, not wanting any smart components from China. So, there are things that have to be taken into account, obviously. When you have the hardware element, you need to plan for that. Currently, in terms of like just the supply constraints, I think currently we are seeing some constraints, for example, in the batteries space, just also because we have very high requirements for the batteries that we are using. So that's, for example, currently one area where we are looking at second sources, third sources, just to be sure.
Okay, and at the moment, in terms of obviously working with manufacturing partners, are you spread all over the world, or is it effectively there's a specific manufacturing base in America, in Finland, in somewhere else, where the bulk of your stuff is produced?
Well, currently we only have one partner here in Finland, Kyrel, in Hämeenkyrö, Finland.
Okay.
They are basically kind of out of the legacy of this, like the electronic manufacturing legacy that we have here also in Finland. However, if and hopefully when we are getting to a much bigger volume, so definitely the US manufacturing would be something that we'd be looking at. But you also have to like be quite certain on the timing, because like so far our volumes are so small that you don't want to really split them, because you lose so much in the efficiencies and everything. Yeah.
You don't need a US factory today, though it is very interesting at the moment, because obviously clearly one of the big investment cases at the moment is data centers, AI. And, and I don't think many of us had appreciated that American energy generation over the previous 20 years had basically been flat. Like America wasn't producing more energy because America didn't need more energy.
Yeah, because manufacturing was moving out all the time.
Yeah, so so consumer was gradually growing, but consumers, no disrespect, it's not heavy electricity uses. It's smartphones and TVs and air conditioning, right? It's not big draws. If you're losing your manufacturing base, then affects that. Now, obviously, America is trying to bring its manufacturing base back, but it's also, I think, the biggest impact is obviously data centers, AI training, and look at the projections from OpenAI, and basically, like they need New York's energy today, and they need India's energy in a few years' time. These are not small numbers and not small calculations. And obviously that's different for the energy providers in the US. They are not used to suddenly scaling to that level or scaling at that perspective. So what are you, not so much in America, because data centers, I think, is a rollout that's happening everywhere. Are you seeing a shift in the sector in that respect? Is there or is it just AI hype, bunch of podcasts, bunch of Sam Altman says, I need a blah, blah. Mark Zuckerberg says he says this, but actually in reality, it's not really scaling.
The energy demand definitely is scaling. So that's a fact. For us, I think the key impact really is that infrastructure that needs to then, deliver that energy from points A to points B and C has already, prior to this data center boom, really been outdated, really not up to the task, and now it's like stressed tremendously by these requirements to being able to deliver all of this electricity from one point to another. So that's kind of where the value of our solution kind of comes in. So we are not like directly in the whole dynamics of more energy generation consumed in the data centers, but we are then needed in between very often for the infrastructure to survive.
And look, it's a classic example where, as we just said, the energy infrastructure has been there since the time of the dinosaurs, right? In the last 30 years, it was underinvested in and creaking a little bit, creaking a lot, but the loading was the same. Suddenly, if you X 100x the loading, that creaking is not creaking, it's screaming. Yeah. And then you've got multiple faults in multiple places. And then ultimately, Joe Public starts noticing when, nice new data center built, but then suddenly the lights are going off. And I think that's a very interesting one on that side. Okay. So that's real. It is happening. And therefore, the more of that rollout that happens, the more use for Safe Grid there is. Just turning on one more direction. So obviously, we both live in Finland. We're quite close to the Russian border. We're very aware of geopolitics, etc., etc. How does the whole Russia hybrid warfare on Europe, kind of like poke, drones over Copenhagen airport, poke, undersea cable cut, poke. How does that factor into your thinking? Is that part of your day-to-day thought patterns and business patterns? Or is that, yes, but that's their problem and we're there just to provide them with the solution?
So there's definitely many dimensions to it, starting even from that cybersecurity that we talked a while ago. But still, I mean, going like to the grid infra itself, obviously what has been seen is that the grid infrastructure is one of the prime kind of targets for any sabotage or that kind of activity. And it just so happens that even though, of course, our technology has been originally developed for your extreme weather events or tree falling on the line, from the electric phenomena is of course very much the same if someone adversely kind of makes or cuts a line or
the
does
tree
something
forcefully falls on the line
exactly
rather than accidentally falls
yes
on the line.
yeah, so in that sense the need for our system is increasing as a result of having a need to have a better situational awareness around the critical infrastructure.
And just scared the hell out of me. So at the moment, SafeGrid as being one of the leading companies in this space, you talked about you are 90 customers out of 7,200 or whatever DSO. But that doesn't give me a percentage. So at the moment, you're probably what, less than 1% of kind of the
of the
kind of
total
protected
kilometers.
Yeah. But
mostly, so globally speaking, like a lot less than 10% of grid kilometers globally are having any kind of digital monitoring.
I can imagine.
Yeah,
I can imagine. But well, let's bring it back home. In Europe, how protected or monitored are our grids? Like, so if you kind of guess, because probably there isn't an accurate figure out there, what are we looking at in terms of percentage terms of monitored grids versus unmonitored grids across Europe?
Yeah, I don't know the exact number, but I would guess that it would be maybe around 15% of grid kilometers in Europe would have some level of
exactly, and then the rest of it is back to treasure map style.
Yes,
type approach.
yeah.
Okay,
and when I say some level, it's definitely not as accurate and real time as our, for example.
Okay. So So there's safe grid level, and then there's some level, and then there's no level. Okay,
yes.
That's fine. Look, I think that this is a kind of, for me, this is one of those big problems hiding in plain sight. It's obviously very visible to you, otherwise you wouldn't have been doing this company. But the ability to effectively manage and maintain our infrastructure, with real-time data and real-time insights is super important, right? We care about keeping the lights on. Everybody notices if the water stops, if the light stops, if the internet stops. Those are the things that society suddenly goes, we were fine, now we're not fine. And we won't be fine again until these things turn back on. And I think that's where we start noticing, and particularly I think where we've got an actor like Russia that is, cutting down the tree to fall on the line with much more regularity. So I think companies like yours are super important and super valuable in that space. So just finishing off, in terms of where you are as a company, are you kind of raising capital? Are you expanding? Obviously the contracts are coming in, but where are you in your kind of your company journey?
So currently we are not raising equity. We'll do most likely some debt.
Yeah, that's
right now.
good.
We are a little bit like deep tech, so we really need to think like capital efficiently.
Very much
when
so.
to raise and how much to raise, and so on, so forth. This year, I think we're going to grow about 100% to about 3 million euro revenue, and hopefully continuing the same growth rate next year, and then the year after. Break-even target is on the second half of 27. Cash flow positive target is by end of 28.
Okay.
So that's about where we are. We are hoping to most likely only raise once equity before cash flow positive.
And again, I do think I'm really pleased that you mentioned debt. I think debt is kind of underutilized by a lot of founders. Have to be, well, we mentioned a couple of names just before we started recording, but again, I think it's fascinating that Elon Musk basically still owns about 30+% of SpaceX stock, right? and okay, had some advantages on that side. Whereas Jeff Bezos, he got down to like 17% of Amazon. Now, when Amazon went public, he owned about 17% of the business, and Amazon was not a heavy infrastructure business. It wasn't it is now, but it wasn't a capital intense business, right? SpaceX was 100% capital intensity from day one.
Oh, yeah.
And I think, again, we tend to look at companies and go, okay, software only, capital light, etc., etc. Hardware vertically integrated, capital heavy, but actually how you manage that kind of financial, non-dilutive capital, etc., etc., over this period really determines how much of the business you own 10 years plus.
Oh, yes. Yeah.
Managing that. So excellent that you're going down that kind of debt route. Fantastic. So last question, who do you admire? Right, you're in this space, you're looking around, which investor, which founder that's in this kind of protecting Europe type vibe, who'd you like?
Well, I would like to point out John H. Mueller, who is the owner of G&W Electric. So basically, G&W Electric is a strategic investor in SafeGrid. They have like undisclosed, so they're totally privately held. John H. Mueller owns like 100% of the company.
Okay.
It's again 120 years old company.
He's really old. Like he did I can tell why he's done the immortality thing and then invested you. Wow,
his father used to run the company before him, and so on and so forth. But anyway, so the point being, they don't disclose their revenue, but it's like over $1 billion revenue company. He invested into SafeGrid, a minority, and he joined our board. And he has been sitting in himself in our board, every month, like getting to know the company, giving all that, experience that he has in the industry with
over
that
his 120-year life. So he's good.
20 years of experience of how the utilities actually work when it's like long timelines and every meeting with like huge energy, support, encouragement. And I think that's really rare for someone to own that kind of business and to take that kind of role in a company that is like less than 3 million euros turnover.
I think it's rare, and by the sounds of it, it's fantastic.
Yes, that this kind of guys, entrepreneurs, family-owned businesses who, really live and breathe the industry, know it, and are willing to commit to something that is new and upcoming. So I think that deserves credit on top of, all these trendy like investors and founders. So I wanted to pick up him.
Look, I'm so pleased that you did. He sounds amazing. And obviously everybody wants to know the secret of mortality. He can sell it to Putin and Modi and G. He'll be fine. But I love it. So when I often talk to founders, I go, who is the first person that you would call if you had really good news, other than partners, etc., co-founders? Who's the first person outside that little group that you would call if you had really good news and really bad news? Right? So it's that kind of like champagne or I'm type news, right? And again, when it's an investor in this potential case, when it's the investor, they have earned that spot. It's not the money that they've put in that gets them that first call, champagne or kind of, tissues.
Yeah.
It's the time and the value that they've brought to your company outside of the check. Yes. So I love to hear when it is the investor, but I know when I do hear it's the investor, and it's not necessarily the big names, right? It's the one who's earned the spot. And it sounds like John clearly earned that spot by his, not just his focus, but his time spent, month in, month out with your company board. I think that's tremendous. Yeah. And we definitely need to celebrate. And again, this is the reason for this podcast, celebrating the investors that are helping to build these companies, celebrating the founders and team that are basically, building a layer of protective technology that most people don't know exists. So fantastic. Loved it. Paula, you are amazing. I'm really a big fan of SafeGrid in this space. And we look forward you to kind of like, so we're not 90, we want 7,000 DSOs.
Towards that.
Towards that. Okay, so look, thank you very much for coming on the podcast. You have been a star.
Thank you so much.
Thanks for listening to this week's episode. To make sure you catch us again, please follow us on your favorite podcasting platform.